There are several reasons for this interest rate skewness that the projects face, but there are three fundamental reasons. The first reason is that the lending system did not take into account the project's life cycle risks. The second reason is that a downside scenario probably was not thought of. The projects face several downside scenarios these days, and probably the reality was not factored then. The third point is that the lending system factored in the sponsor's ability to repay these loans and to support these projects should a downfall occur in these projects. However, the lending system did not factor in the project level risks and did not factor in the ability of the project to generate cash flows to pay its debt service. For the infrastructure bond markets to develop, first the counterparties will have to be sensitive to the requirement of the investors and for timely debt service. That is the fundamental aspect of any bond market. You have various aspects to measure depth in the bond market, especially infrastructure. If the counterparties, the revenue counterparties, say for example discoms or any concession grantors, if they are not sensitive for debt service, the bond markets will not develop. For example, NHAI in its concession agreement, it is a counterparty and signatory for the escrow agreement as well. That is a very good model where it participates in the debt service in the escrow account agreement as well. For example, in an annuity project, it is supposed to sign an escrow agreement where the lenders are also a counterparty. So therefore, we need such models that sensitizes the counterparty and it links counterparties with the investor, which is essential for bond markets to develop. Another aspect of depth in the infrastructure bond market is the creation of appetite for various risk categories. For example, in developed markets, you have a market for junk bonds as well. Various bonds are getting sold in the US and the UK at various rating levels, and there is still an appetite to it. In India, we have to develop appetite for investments in the various risk buckets. It is not adequate that we sell a AA or a AAA bond alone. So the government must take actions in terms of its policy initiatives to create an appetite for these bonds as well. The bank's slowdown in lending to infrastructure projects is a blessing in disguise to the infrastructure bond markets. It creates depth in the debt market. While banks are well positioned to take construction related risks, I don't really think it can take risks related to operation stage. That should be diversified to the bond market and the capital market. The frequent resets, for example annual reset of interest rates, makes bank lending or bank's capital quite unproductive for any infrastructure asset. The frequent reset function of interest rates increases the cost of capital for any infrastructure projects and introduces a bit of uncertainty. Therefore, bank lending may not be suitable in the long term for infrastructure projects. The second point is that banks' capital will be freed up to create new assets if the debt exposure is diversified to the bond market.